and redefined. Swing by our stand to meet your favorite personalities, snap those perfect pics for the gram, and soak up the VIP treatment you deserve. This isn't just TV, it's Eswatini TV, home of home-brewed content crafted right here for you. And hey, don't forget, paying your TV license isn't just a rule, it's your ticket to unlocking all the magic that we bring live and direct. So mark your calendars, bring your crew, and catch all the excitement live. Eswatini TV, where local stories come alive and your screen gets the glow up it deserves. Digital transformation 2.0? More like turn up and tune in 2.0. See you there.
Make better money choices. Choose a bank that takes your money seriously. Business Watch is brought to you by Nedbank.
The time now is 2 p.m. It is Wednesday, and welcome to today's edition of the Business Watch, brought to you by Eswatini TV in partnership with Nedbank. My name is Notele Sitole.
And I'm Sifiso Ngumalo. Thank you so much for joining us. Here's what's on your agenda this afternoon. Coming up, an economic lens into the sharp dip in private sector credit. We are seeing here a surge in official reserves as well as a money supply that is on the move. Well, all of this is revealed by the latest numbers from the central bank, which paint a mixed picture of Eswatini's economy. Private sector credit is barely down this month, but still up over 6% from last year. Households are borrowing money or borrowing more for personal expenses, but mortgages continue to cool. Businesses, well, they are pulling back, with distribution and tourism making the hardest or taking the hardest hit. Broad money is down, liquidity is tightening, and yet reserves just shot up 45% in 1 month, thanks to SACU inflows, pushing import cover to the brink of the comfort zone. Now, the prime lending rate, that could be a question. Well, it is unchanged. And the big question is, does that hold in the months that are ahead, or are we staring down a shift in monetary policy? Our economist, Sanele Sbia, will join us, and he's going to tell you what the numbers mean, why they matter, and where your business could be headed next. That is coming right up.
But first, in our discussion with Nedbank today, we'll take you back to a conversation on asset insurance, the assets that qualify for such financial protection and those that don't. But first, our business news.
All right, you're still watching Nedbank Business Watch. We get into our business news segment now.
The Ministry of Agriculture is ramping up export-focused production to attract investors. Agriculture Minister Honorable Mandla Chauka says Eswatini must first secure food sovereignty, then scale up to meet demand in ready global markets. He was speaking at the Agriculture Business and Investment Forum held at the Happy Valley, Eswatini.
The first thing that we need to do is to make sure that we are able to produce, because you can never export something you don't have. So we need to be able to scale up our production capacity so that we are able to produce, to be able to fulfill the local market first. That is why we always speak about being or achieving food sovereignty, so that we are able to feed ourselves and be able to provide enough food for the nation. The second thing then after that is then to produce enough for the export market. This is very important because that is where the revenue that the country needs should come from, especially because when you export, you are paid in high-ranking or heavy currencies and the rest of it. That is why, therefore, we have brought in a lot of investors, and what we are saying is that we want to cover all categories of farming. Deal with subsistence farming to be able to feed the average person in the rural communities, and then deal with medium-scale farming so that we are able to start commercializing and people make deal with the other exigencies of family life. But then, which is really the concentration of our discussion today, is the third tier, which is now large-scale commercial farming. That is what we need to do. And we are then asking investors to come and invest in the production system of this country so that we are able to produce enough and then export to the markets. The markets are actually open and yawning for our produce. If you go to Asia, for instance, or in the Arab countries, they are waiting for us to produce chevron, to produce beef, to produce vegetables, to produce a lot of other things, which unfortunately at this point in time we are not able to fill. So we are therefore saying, let's go commercial, large scale, so that we are able to then tap into these markets.
Ozel, who is a potential investor, says there is a lot of potential areas of investment in Eswatini.
This is a country with a lot of potential, especially because of the population and young minds. Education is going well, as well as when I come here, I was surprised with the presentations because there are a lot of opportunities for the foreign investors. A lot of tax deductions, incentives, leasing options. The government is literally trying everything to bring foreign investor and then make sure this country grows economically. And that's why we are here. Minister of Agriculture, I'm saying in a very positive way, very aggressive, like, you know, he wants to bring people. So there's a hardworking team. I watch the presentations. People, they know what they are doing. Surprisingly, not every country is like this. They know what they are doing. They know where they want to go. So I think they just need a bit push from international community to develop this country, which is landlocked. So they need more special attention. In this case, my advice is just for Eswatini to focus on the blue ocean points, where they can be unique and strong in the regional and global industry, global trade.
It is envisaged that there will be 225 participants drawn from various domestic and international financial institutions, private sector players and development institutions, and farmers on the Agriculture Business and Investment Forum. The forum is meant to boost food security and trade. Reporting, Nelson Dlangamandla, Fuminko Sinzinisa, Ezulwini.
In other news, private sector credit took a slight dip of 0.05% month-on-month in June, but maintained strong yearly growth, surging by 6.5% to reach 21.6 billion emalangeni. Well, this is according to the Central Bank of Eswatini's latest monthly statistical release for June-July that was published on Tuesday. Now, the figures signal resilient demand for credit in the economy, and this is despite short-term fluctuations reflecting underlying confidence in the private sector.
The Central Bank of Eswatini states that the slight month-on-month contraction was on account of reduced credit to other sectors of domestic economy and businesses. Meanwhile, credit to households and non-profit institutions serving households registered an increase over the month of June this year. Credit extended to businesses amounted to 11.7 billion emalangeni at the end of June, lower by 2.2% month-on-month and higher by 12.7% year-on-year. A breakdown by business size indicated that credit to both large enterprises and small-medium enterprises declined during the month under review. As a result, credit to large enterprises and small and medium enterprises fell by 3.1% to 8 billion emalangeni and 0.3% to 3.7 billion emalangeni, respectively. Despite the declines, large enterprises continued to dominate, accounting for 68.4% of total business credit, while credit to small and medium enterprises accounted for the remaining 31.6%. Credit extended to households and non-profit institutions serving households edged up by 3.3% month-on-month and 1.1% year-on-year to close at 8.9 billion emalangeni at the end of June this year. At the end of June this year, the liquidity position of banks declined by 2.1% month-on-month, but increased by 7.3% year-on-year. The month-on-month reduction was attributed to a fall in banks' balances held with the central bank, investment in government securities, and emalangeni held by the banks. Despite the decline in absolute liquidity, the liquidity ratio remained unchanged at 30.9% in June this year, the same level recorded in May this year. Provisional gross official reserves stood at 11.9 billion emalangeni at the end of July this year, reflecting a significant growth of 45.1% month-on-month and 12% year-on-year. The notable increase in reserves was mainly attributed to the quarterly inflow of Southern African Customs Union revenue at the beginning of July. At this level, the reserves were sufficient to cover 2.9 months of imports of goods and services, an improvement from 2 months of import cover recorded in June this year. Reporting, Nelson Langamandla, Mbabane.
All right, 11 minutes after 2, more of Nedbank Business Watch awaits after the break.
Digital helps you make cross-border payments. Human gives you global specialists. Digital allows you to apply for a loan anytime, anywhere. Human connects you to credit experts. Digital puts you in control of your money, while Human connects you to wealth advisors. Digital allows you to freeze, unfreeze, cancel, and reorder your card. Human gives you that personal touch. Digital when you want it. Human when you need it. Get the complete private banking experience with Nedbank Private Clients.
Eswatini TV has signed a code of conduct that is enforced by the Eswatini Communications Commission. We are committed to reporting news that is accurate, comment that is fair, and programming that does not amount to hate speech or the description of gratuitous violence or explicit sex. For any complaints of our programming, please contact us on 2411-9600 or email info@eswatinitv.co.za. You can also contact the Eswatini Communications Commission on 2406-7000 or write a letter to ECCOM on PO Box 7811 Mbabane. Email address is info@ecom.org.za.
All right, 13 minutes after 2. Thank you so much for staying with us. This is Nedbank Business Watch. We get into our discussion now with our economist, Sanele Sibia, and the conversation is just premised on the latest numbers that are in by the central bank, which are telling a story that is anything but boring. Business credit standing at 11.7 billion emalangeni in June, down 2.2% from the previous month, but up to 12.7% year-on-year. Credit to both large enterprises and SMEs declined, falling by 3.1% to 8 billion emalangeni and 0.3% to 3.7 billion emalangeni, respectively. You know, large enterprises remained dominant, holding 68.4% rather of total business credit, while SMEs held 31.6%. Sanele Sibia joins us. Good afternoon to you, Mr. Sibia. Thank you so much for making time. It is interesting what these numbers are showing us here. Credit to the private sector slipping just a fraction this month, but climbing year on year. Households borrowing big on personal loans. But of course, we are seeing that all of that is happening while business credit pulls back, especially in distribution and tourism. Broad money is down, liquidity is tighter, and yet reserves just posted a massive 45%. That is a jump in a single month. Perhaps let's start on the credit landscape. Private sector credit dipping 0.5% month on month may look slightly negligible, but what does it signal about the lending climate in the short term for you?
Thank you, Mr. Ngumalo, and good afternoon to the viewer. So what we're seeing there, Mr. Ngumalo, could just be an indicator of some short-term cautioning or tightening. Remember, as we were coming into August.
All right, it seems as though we are losing Sanele Sibia due to bad network connectivity right now. We are hoping that we are able to regain our connection and we can continue to further our conversation around, you know, the latest Central Bank of Eswatini's June-July statistics, which tell a rather compelling, perhaps concerning story, particularly when you look at what households, you know, are looking in terms of borrowing big, particularly on personal loans, while business credit continues to pull back, especially in distribution and tourism. Mr. Sibia is back. Thank you so much, Mr. Sibia. Let's hope that our network connection will not betray us again. I will offer you the floor to continue to expound on your session.
Thank you, Mr. Ngumalo. So what we were basically looking into was, that uncertainty around the tariffs and, the uncertainty around what was going to happen between South Africa and actually the U.S. We do know that South Africa is actually at the crossfires with the U.S. There's a bit of ruffled relationships there. So that's what we're looking into, and you do expect credit to start signaling, such. And furthermore, you're still seeing some lagged effects of, those February, March, and type of those movements where we saw USAID closing down. And you do recall that USAID was quite a huge player within the Eswatini market in terms of the granting and the employment that was created there. So you do expect such shops to build in a bit of conservativeness within the credit landscape, Mr. Ngumalo, and also you do expect to see a bit of that, of that money coming out of the economy.
Yeah, when we look year on year, though, we are seeing that credit is up 6.5%. I wonder if this growth is sustainable, particularly given the current economic environment. What do you say to that?
I think, Mr. Ngumalo, what it signals is, in the real term, in nominal terms, year on year, you are still seeing that increase. But what would be interesting is if you were then to look at it in real terms. But what the fact that we're still on that positive territory, Mr. Ngumalo, does show that in as much as we are a bit cautious as an economy and as banks, you see there is a bit of caution there, but there is a bit of overall positive sentiment in regard regarding the economy and where it's going to go. And you would actually expect, Mr. Ngumalo, that, once we get clearer direction in terms of the salary movements, clearer direction in terms of those, what you call them right now, the reviews and all of those, you would expect to see that number pick up even further, Mr. Ngumalo. So there is a bit of positive sentiment within the economy this year.
Positive, but sustainable? No? Yes?
Sustainable, yes.
Okay. Let's move on to household lending. And this one is pretty interesting because it rose by 3.3%, and that is month on month, with unsecured personal loans leading the way. What is driving this appetite for unsecured credit?
It's one of two things, Mr. Ngumalo. You could be looking at the issue that, the households are feeling so much pressure. And unsecured lending is one of those avenues that households use to actually deal with, those cost of living pressures and other financial pressures within the households. So we've been looking out for that to see how it's going to evolve and how it's going to play out, and if households are going to eventually get the relief that they are looking for. So you do expect that in situations where the household pressures, number one, and two, in situations where the cost of borrowing is becoming relatively cheaper day by day, month on month, after every monetary policy committee meeting that we've had the past 2 months before the last one, we've seen a bit of a reduction in the interest rate. So now what that does is it improves the affordability for quite a number of people, and thereby inducing households to take on that money. So we do expect it to see that one growing as a response to the pressures that households are dealing with.
And then we continue and we look at mortgage lending, slipping by 0.5%. Could this point to affordability constraints in the property market, or is it more about shifting consumer priorities?
My assessment of that, Mr. Ngumalo, shows it going two ways. One of the things that we're seeing is the shift from we're seeing Eswatini building beautiful homes in rural areas, and we know that those ones go under secured loans, but I'm not sure if they are classified under mortgages. And then secondly, what we are seeing in terms of that mortgage that's declined, Mr. Ngumalo, it goes back to that impact of the USA shock and the global uncertainty shock. People don't really want to commit to very long-term investments and decisions, because you're talking of a 25-year type of arrangement when you're going into a mortgage. So when there is a bit of uncertainty and lack of clarity, then it becomes a bit difficult. And this actually shows in the markets that it's actually become a buyer's market. We're seeing property prices going down, quite a lot these days, because there isn't much people willing to buy, because it's quite a long-term commitment, Mr. Ngumalo, and with a lot of uncertainty that's ongoing right now. So people really don't want to commit into such long-term type of investments. And also banks themselves, once you go through such a shock, you then recalibrate your model. So probably right now, banks have also changed their outlook on who the client ought to be, that is being awarded that mortgage.
All right, let's leave it there. With Sanele Sbia, our economist, we are discussing the numbers that are in for the June-July monthly statistics released by the Central Bank of Eswatini. These numbers are clear. The signals are pretty much clear as defined by our economist, but we also see that the road ahead will demand some sharp decisions from businesses as well as consumers alike. The show awaits with more after the break.
Welcome back. Thank you for staying with us. You're still watching Nedbank Business Watch. We're joined by Kosi Ngwenya. She is an SME consultant at Nedbank Eswatini. Today we're talking about asset insurance. What is asset insurance and what assets are covered under this insurance? A very good afternoon, Kosi. Thank you for coming back. Yeah. So today we're discussing asset insurance. Who gets covered? I will assume it's SMEs, your clients, most trusted clients. Tell us more about what is actually asset insurance.
Thank you, Lulu. Good afternoon to our lovely viewers. Talking about insurance, most especially asset insurance, Lulu, it's for the SMEs. It's for those people that have assets that they want to cover. You can cover your trucks, you can cover your businesses, as long as you have something that's valuable to you. So. That you need cover for in the event of a loss or an unforeseen circumstance. So you are covered for that. That's where the insurance comes in. Yeah.
So even cell phones, because I know some people do not cover them, but some opt to cover cell phones. Do cell phones fall under this insurance? Under the
homeowners. Under the homeowners, for those clients that have personal accounts that want to cover their homes, contents in the house, that's where the cell phone comes in, or your laptops, because those are the assets that the valuable assets that you take out every other time. So you can cover them. Yeah. Anything that's a value to you, you can cover.
Okay. Yeah. So after signing, when am I eligible to claim? For instance, I have an accident or something, my asset has been stolen within a month of signing with the Nedbank's insurance. When am I able to do my claim?
Okay, a good one, Lulu. Clients need to know there's no waiting period. It's not like a medical aid type of, as soon as you sign the policy or as soon as you get into that contract with the insurer, that's immediate cover. That's immediate cover. That's when you get to pay your premium. Even after you paid your premium, signed your policy, you bump your car or whatever, then you are insured.
So, Kosi, let's talk about, the importance of insuring our assets. I know that some people haven't embraced the culture of insuring because some say they pay the premiums or they pay lemali monthly, and we get that after 5 years, nothing has happened, no incident has happened, and they can't do any claims, so they just forget about insurance. How important is it to insure your assets?
Lulu, like I've said, insurance comes in when there's unforeseen circumstance, because we can't control what happens on the outside. We can't control the environment. Right now we've got hails, you can just drive your car and you just drive into someone, or someone drives into you, vice versa. So you never know what can happen. That's why it says it covers you during the unforeseen circumstance, because some you can find that I've been driving my car for 5 years and nothing has happened, and then you stop paying insurance. The next day, boom. Then what? So as long as it's a valuable asset to you, I implore clients to keep it covered, especially those high value assets like your trucks. If you are a businessman and you are a truck owner, make sure those are covered. The trailers are covered. You have tracker, because there's discounts for having a tracker on your vehicle, by the way. Okay. Because then if something hijackings, because the trucks, you've noted they go in and out of the country, right? So you find people waiting there just to hijack those. That's a valuable asset, Lulu. It's millions. We are speaking millions, and once someone hijacks the truck, then you are done. Even the goods that you are transporting, you are done. So I implore clients, SME clients, even those businesses, just cover those things. Cover those things, because really, you buy a truck with Nedbank. We want you to cover that asset before it can leave the dealership. It has to have cover. Something happens, like we are saying, you can say I'm a good driver. I pay attention, but what about the other person that's not paying attention?
True.
Yes.
So what am I actually covered against? There are a lot of hijackings nowadays. People get into a lot of accidents. Unfortunately, there's a lot of theft. What am I actually covered against? There's fires as well.
There's
if my house is caught fire, are those amongst the things that I'm covered against?
Okay, thank you, Lulu, for that one. You are covered in the event you have a car accident, even if it's an accident where you're just bumping your own wall. If the car is damaged, then you are covered. If that asset is damaged after that event, you are covered. Hijacking or a near-miss hijacking, because you find that sometimes your car is recovered after that hijacking, but you know how these people go and they start tampering with you, so it's covered. There's third party. Even if you do bump someone with your car, maybe the person that you have caused an accident for is also covered, and you are also covered. That's under the comprehensive cover. Even those unforeseen environmental changes, there is hail, there is strong winds that come and damage our cars, you are covered. Windscreen damage, you drive behind a car, a stone just hits your windscreen, you are covered. Yes.
So how long does my claim take to be processed after submitting it?
After submitting, the most important thing, Lulu, that I would encourage for our clients, you report the claim as soon as an incident happens. As soon as an incident happens, make sure you get a police report. For every incident, make sure you get a police report, and as soon as the loss occurs, then you are able to report. Maybe you report to your broker, you report to your banker. So I've just had an accident, so that we are aware that we are expecting a claim from client so and so. Then you go around, you get your quotations. After the police report, you get quotations. Some you might find, some insurers, they say maybe we need 3 quotations from different dealers. Some you find, I'll just bring one, which you prefer. Yes.
All right. So let's talk about costs now. What determines, the cost of insuring my assets? It depends on the value of
the asset that you are insuring for. The value of the asset, a car that you can't insure a car with the same amount as you insure your truck, right? Because trucks goes into millions and then so the value of the asset, the age of the asset, the age. You find another truck is for 2024, another one is for 2005. So there's depreciation value there. So the value can't be the same. And in essence, the premium can't be the same. The age of the driver, because you see, when you are 60, you tend to drive in a different manner than a 21-year-old. And when you're in your 30s, the maturity on the driving, So it also determines that, Lulu.
Okay.
Yeah.
So can I pay insurance for a relative or a family member? For instance, I'm a parent and I want to take out insurance I want to pay insurance for my child. Is that even possible? How does that happen? Or a relative such as a sister, a sibling, I want to pay insurance for her assets, but she's not employed.
She is not employed. That's a tricky one, Lulu, because for every insurance that is taken, there should be an insurable interest. So what is your interest in that asset that you want to insure? Do you have an interest? Yes, I am a parent. I bought the car for my child. Maybe the car can be insured in my name because I'm the person that has the insurable interest. So you can't just say, I bought my son so a car, so the premium or the policy will be under his name, but it can be under myself because I have the interest in what I'm insuring. Okay. And with that, it comes with a certain, because if I'm paying, so the pinch is there, so I will take care of the car in a different way. So what's your interest in what you want to insure? So insurable interest should be there.
Okay.
Yeah.
So I want us to focus now on car accidents or theft. Let's say I'm involved in an accident or my car has been stolen but outside the country. Am I still eligible to claim?
Yes, you are eligible to claim Lulu, as long as it's in the SADC region. Most importantly, when you are going to drive your car outside of the territory of where you are covered, it's very important for you to alert your insurer to say, I'll be driving maybe to Mozambique, because there's also a special insurance that's taken for countries. If you are going to Mozambique, you know, so there's a certificate that's being issued for you. But if you are going to take the car outside of the territory of where it's covered, it's important for you to say, I'll be driving to Lesotho, I'll be driving to Botswana, so that we are aware that you are. But otherwise, even if you can't do that or you haven't been able to do it, it's still covered as long as you are in the SADC regions and as long as you have a police report to say your car has been hijacked.
Yeah,
and as long as you have paid your premiums, then you are covered.
As long as you pay,
most importantly,
religiously, every month.
Yes.
All right. So still on accidents, in an instance where I'm involved in an accident and it's my fault, will insurance assist?
Yes, like I said before, there's comprehensive cover.
Okay.
You are covered should you cause damage to your own asset, or you cause damage to another person's asset. So it's comprehensive. It takes everything.
Okay.
Yes.
Yeah, all right. So let's talk about tips and important information to note.
Tips and important
Particularly
information.
with the policy documents, it's important to read through your documents before signing.
Thank you, Lulu, because the tendency is that we just, as clients, come in and sign, and we don't read the fine prints. So I would say to clients, once you get the policy schedule, familiarize yourself with the terms and the conditions so you know what's covered, so you know, and the rate of which it's covered. You know what's not covered or what the exclusions in that policy. So it's very important that you go through the schedule. You see? Yes, so that you just know what's there. And also to make sure that your premiums are paid in time, because it will give you the duration, or because some pay like quarterly, some you find premiums are paid yearly, some you find monthly. So you know the dates of which you are supposed to be paying or the dates on which you are going to be debited. So also that it's in the schedule.
Okay.
And also the reporting time, that's very key. Like report a claim at the first instance of a claim or an incident.
I don't even have to wait a day, 24 hours. That's late. Unless I'm unconscious. Unless you're unconscious, but the police are going to be there, obviously. But as soon as you're able to talk to your insurer, you say, you just take a call, I've been involved in an accident. So we are expecting a claim from the client. Okay.
So some clients have a tendency to go a month later, but I thought it was just a minor thing, but 2 weeks at least. 2 weeks at least.
Okay. So before you conclude, Kosi, what documents are needed, to apply for insurance?
The documents that we would need, it's like in case of a motor vehicle, we need the invoice, so we know the exact cost of the vehicle or that asset. And even if you are buying a business, we should know, buying into a business, how much is the business costing you, So we know if it's fitted with it, does it have a tracker? Does it have a trailer? So we know I think that one is key. And then it will be the director's documents, depending on what we are covering, and the documents for that business if we are covering for a business.
Okay.
Yes.
All right. So lastly, contact details. How do clients get a hold of you guys?
We have our insurance department, the Nedbank Center Mbabane, and also you can just visit any of our branches countrywide. You get information on the insurance. You can find us on X. You can find us on Facebook. You can call our help desk at 3278-1999. Otherwise,
it's all there. All right. Thank you so much.
It's all there. Thank you, Lulu.
Yeah, of course, the SME consultant at Nedbank Eswatini. For more details on their assets insurance, to contact them or interact with them on the social media pages, or to visit one of their branches. They are available countrywide. As Bakalita Magete, siyabuya khona manje.
Welcome back. That was a recap of a discussion with Nedbank SME consultant Kosi Ngwenya on asset insurance. Now, this refers to insurance that provides financial protection against loss or damage of high-value properties such as vehicles or equipment due to risks such as fire, accidents, or natural disasters. Moving on with the program, with Eswatini taking bold steps to ramp up agricultural production, the United Nations has reaffirmed its commitment to support the country's drive towards food security and export growth. UN Resident Coordinator George Wachira praised the government's efforts and highlighted key strategies that could help Eswatini achieve sustainable agriculture and tap into global markets. Let's have a listen.
At the core of the conversation today is the idea of transforming our food systems from traditional to diversified, formalized, and industrial production with the capacity to satisfy both our national needs for food, but also contribute to the economy through employment and export earnings. If I may say a little bit about the state of agriculture globally and also in the region. First, we do know, and I know these statistics will be repeated several times, that global agri-food systems employ an estimated 1.23 billion people and have become really fundamental to feeding the world, but also creating opportunities and livelihoods. We also know that on our continent, Africa is home to 60% of the world's uncultivated land and has abundant water. It may not apply to every country, but has abundant water collectively. Lots and lots of sunshine, even when it's winter. And also great potential in terms of agriculture production, not only to feed ourselves, but also to export. We are told that the agri-food system employs about 70% of sub-Saharan Africans, although largely in subsistent production that is struggling to keep pace with the expanding populations of our continent. So we are reminded that food insecurity remains severe, with nearly 58% of Africa's production population facing moderate to severe food insecurity, almost the double average. And in order to transform Africa's agri-food system, it will be critical to achieve African Union's Agenda 2063, including through leveraging opportunities presented by the Africa Continental Free Trade Area and capturing a broader global market share. Reminding ourselves that where we are positioned in Eswatini, our focus should not be producing for Eswatini, but producing for the region and indeed the continent and the world. Now, if we look at the global and regional national frameworks for supporting Eswatini's agri-food system transformation, we observe that there is a very strong network of global, regional, and national frameworks that support the transformation of our agri-food systems. Number one, the National Development Plan places a strong emphasis on promoting agriculture and high-value crops alongside value addition and agro-processing. And for us in the United Nations, we take our matching orders from the National Development Plan, so this is already a good guidance for where we needed to be. Number two, the second generation National Agriculture Investment Plan prioritizes boosting productivity to meet growing food demands, enhancing climate resilience through sustainable farming practices, connecting smallholder farmers to markets, and attracting increased private sector investment. Number three, at the United Nations Food Systems Summit in 2021, the Kingdom of Eswatini identified 6 priority solutions to achieve sustainable food systems by 2030. This included the improvement of public financing mechanisms through the establishment of an agriculture development fund, and may I applaud the country and the government that this is already a reality, that the Agriculture Development Fund is already in place, and this deserves our commendation. Number 4, the 2024 Pact of the Future highlights 5 key pathways to drive sustainable growth. These include transforming food systems, expanding energy access, boosting digital connectivity, strengthening skills and education, and creating decent jobs while protecting the climate. Importantly, the Pact of the Future spotlights the importance of sustainable, reliable, affordable financing to drive investments in this area. This conference, this getting together, is about investments, and we have to continue to highlight the fact that financing for our developing countries sometimes remains inaccessible, too expensive for the goals that we want to achieve, and we have to continue our collective advocacy to make sure that we can access affordable financing. Finally, on this count, let me highlight 2 important things that happened recently. January of this year, we had the African Union Commission's Comprehensive Africa Agriculture Development Program summit in Kampala, which came up with the adoption of a 10-year strategy and action plan centered on 6 core achievements, including sustainable production, increased financing, nutrition security, inclusivity, resilience, and governance, all essentials for Africa's agriculture. Again, the theme of financing, affordability of financing to invest in these areas keep coming up. Finally, more recently, again, I think it's 2 weeks ago, in Addis Ababa, and I trust our Honorable Minister was there, the UN Secretary General's call to action highlighted 6 priority areas for urgent investment and collaboration, including, again, innovation, expanding financing for smallholder farmers, integrating environmental and social objectives, responsible technological advancement, and empowering youth leaders. And again, one of the themes for today is the place of youth in agriculture. Through the technical leadership of the FAO, that we in the Kingdom of Eswatini, the UN family, has focused in supporting the Kingdom's aspiration in as far as food security, food sovereignty are concerned. Let me finish by a few key messages, call to action. First of all, to background this, that we have within the UN system a special office, special advisor for Africa, and this office has carried out various studies, and one of them highlights what has been called the 3 interconnected paradoxes facing Africa. Number 1, abundant financial resources, yet widespread debt distress, and inadequate, unreliable, and expensive development financing. That's one paradox. That we have lots of financial resources in this continent, but we are in debt. We cannot access money when we need it. When we do, it's very expensive and unsustainable and unreliable. Number 2, we have vast energy resources, yet we have energy insecurity. And number 3, we have vast agricultural potential alongside food insecurity. These challenges reinforce one another, with financial constraints deepening energy deficits, which in turn exacerbate food production and food insecurity. There is therefore need to align national systems and policies, develop homegrown financing and investment solutions, build strong partnerships, and carve market niches in the region and global markets. So I have 3 key messages. Number 1, de-risking private sector investments to promote large-scale investments. And here highlighting that the USD 2.5 trillion financing gap in developing countries means that farmers in Africa processors and other actors in agri-food systems will continue to struggle to access the financial resources needed to accelerate progress toward the SDGs and also meeting our aspirations nationally. So the idea of de-risking private sector investments becomes a major intervention that governments must pay attention to.
And we've just heard from UN Resident Coordinator, His Excellency George Wachira, reaffirming the UN's commitment to support the country's drive towards food security and export growth. Moving on with the program, we'll head on over now to our market analysis segment. And in our market analysis segment this afternoon, I am joined by Toba Kamete, who is the Treasury Sales Manager at Nedbank. Rather, a very good afternoon to you, Mr. Kamete, and welcome to the program. I'd like to start here. The U.S. and China extended their trade truce to November 10. How significant is this extension for global trade sentiments?
Good afternoon to you and viewers. It really doesn't change much in terms of what we've seen from the initial announcements in April, but it sort of prolongs the uncertainty that we've seen prevail in the market over the last few months, because then it means things could change, either for better or for worse. So with uncertainty in the market, then it creates quite a number of issues, if I can call it that. So we expect then that there will be sort of muted, trading or decision taking because of that uncertainty until people or investors, market participants are able to see what outcome is going to come out in November.
Right. This extension, how might it impact U.S. exporters and importers, especially those with China-dependent supply chains?
So currently, it means that they will be bearing the current tariffs that are currently happening. But I think, as I've mentioned, that it bears uncertainty. It means long-term decisions cannot be made until then. So that is how it would then affect businesses, your importers and exporters alike, to say that you probably don't want to commit to anything further than the few months that we have until that decision.
Right. Let's get into the CPI data that came out yesterday. The Consumer Price Index increased a seasonally adjusted 0.2% for the month of July and 2.7% on a 12-month basis. What is your interpretation of these figures?
So we've seen a modest increase, as you've said, in the CPI numbers coming out yesterday. So the market has sort of reacted to this, with confidence that we are likely to start seeing a reduction or an easing in the monetary policy stance of the Fed, because the market was sort of expecting a higher print than what we saw yesterday, especially with the introduction of tariffs. So waiting to see how those will filter down to consumers. But so the print that came out yesterday was sort of within markets' expectations, and further exacerbated expectations that the Fed is going to cut rates in their September sitting. So that has sort of then weakened the dollar. We've seen the dollar take a bit of a knock, reaching levels of about 17.5 on average today against major currencies.
And our equities, we're seeing market fluctuations here and there. How are we looking in terms of figures today?
From an equities perspective, our equities are doing quite well. You can see all of them are in the green. So that is widely due to the expectation of an interest rate cut. So that has sort of given investors confidence that rates are going to go down, which means that they're then moving away from yielding assets, from your bonds and treasury bills, because rates are expected to go down, and moving more into your equities and your gold as well. So we've seen almost all the indices showing a positive, with the S&P 500 showing a significant increase of 1.13% at $6,445.76. The FTSE also up 0.2% at £9,147.81. And the JSE All Share as well, up 0.64% at 101,000
Beautiful figures there. How can we keep up this momentum, the improvement? How can we make it more sustainable, see more growth in the coming days?
So there's quite a number of economic data that is coming out. I'll start maybe from a South African perspective. Today we saw the Chamber of Commerce release a business confidence index in South Africa, which showed that there was an improvement in that confidence in July compared to June at 116 against 113.
Okay.
So that sort of shows that how the private sector is viewing the economy of South Africa. We saw that is due to a number of things. Vehicle sales is due to the price of precious metals, which South Africa is an exporter of, and all of those things. So there is positives, but also, we still have uncertainty in terms of tariffs.
Okay.
We still have geopolitical tensions and all those other factors that are impacting or that move the needle in terms of the indicators.
Okay.
So it's a more of a watch and see.
In terms of commodities, can you break down the numbers for us?
All right. In terms of commodities, gold is doing quite well today.
Right.
It is at 3,366.54 per ounce, up 0.62%. So gold tends to do well in an environment where rates are low. So with the expectation of rate cuts in the market in September, then market participants then look at safer options to put their money in, and then gold then tends to be one of those options. So it has benefited from the print that came out, the CPI print that came out yesterday. And then Brent crude is down almost 1% at $67.6 US dollars per barrel, largely due to increased supply in the market. We also received a forecast from the International Energy Analyst report, which showed that output of oil products of oil is likely to increase by 2.5 million barrels per day compared to a previous forecast of 2.1 million. And then that is unfortunately not countered by the demand of oil in the market. With the uncertainty that's happening, with the large economies, then there is sort of low demand for oil. So that has knocked down the price of oil significantly. I think it even went down to about $66 earlier on in the day. But we've seen a slight recovery to the 67 that we're seeing now.
Right. And our currencies, how's the rand or the lilangeni looking against the dollar?
So the lilangeni is trading, quite well, rather the rand, at 17.5 against the US dollar, up 0.67%, at 20.5 against the euro, and at 23.76 against the pound. I think we've sort of discussed the factors that are going into this. It is the business confidence numbers, it is the weakness in the dollar due to the CPI print, and just the geopolitical environment. So it is, we've seen quite an appreciation so far in there. And I think these are levels that we haven't seen in a while.
Right. Thank you very much, Toba. That was Toba Kameze, for our market analysis segment this afternoon. We've almost come to the end of the show, but I'll have you know that Trump is meeting Putin this coming Friday, and we can just expect, the numbers to play differently and some of the market elements to be affected. However, we'll be on the lookout for those numbers. For now, from myself and the team here at the Nedbank Business Watch, it's been lovely. Until the next edition, take care.
Digital helps you make cross-border payments. Human gives you global specialists. Digital allows you to apply for a loan anytime, anywhere. Human connects you to credit experts. Digital puts you in control of your money, while Human connects you to wealth advisors. Digital allows you to freeze, unfreeze, cancel, and reorder your card. Human gives you that personal touch. Digital when you want it. Human when you need it. Get the complete private banking experience with Nedbank Private Clients.
Make better money choices. Choose a bank that takes your money seriously. Business Watch was brought to you by Nedbank.